Do you think valuations are too rich? Do you think forward PEs are just a little bit too rich looking into 2024?
I think we've seen a lot of correction already in valuations. When we look at S&P 500 forward PE ratios, you are looking, pretty much back in line with long-term averages. So I think for the path for valuations, I think really relies on some stability in bond yields. I think it's also important to, think about why bond yields are rising. To an extent, if that's due to better growth, I think that's something that equity markets can handle. But I think what's really more important for us is that earnings backdrop. You're seeing some skittishness around this earnings season, I think, as management starts to talk about, what future quarters might look like. But I really wouldn't miss the forest for the trees. This actually looks to be the first quarter of earnings growth after 3 straight quarters of contraction. And I think as the market, moves past these catalysts and gets more clarity that the Fed is indeed done hiking, I think that allows for earnings growth to power through and for stock markets to rally forward. But again, that's not to say there won't be some volatility along the way.
I mean, to that point, investors have just been punishing any company that slightly misses. We saw that in big tech. What do you just make of the sentiment shift we've seen this earnings season?
Yeah, I think it's been really interesting. To that point, of the companies that have reported, 60% of them have had a negative price reaction. And I think that has to do less with the earnings results themselves, but again, more so what management has been, forecasting for future quarters. Are they seeing, I think, more macro headwinds, and what does that mean on a go-forward basis? But again, I would just telegraph that these are quite solid reports, and I think once we move past this quarter, I think it's more of a transition quarter. I think it starts to look more promising.